If you're nervous right now, good. Because, 5 red months in a row tends to do that. Bitcoin hasn't fallen like this since the 2018 bear market. The headlines are, well, pretty predictable. Bitcoin experiment failing, crypto winter returns. Is this the end? Let me ask you something. If it were truly the end, would it feel this loud or this familiar? Right now, the mood is heavy. Your portfolio looks tired. Twitter feels cynical. Even the so-called experts have switched tone. Suddenly, the same people who shouted new all-time highs soon are now discussing structural collapse. It's fascinating, really. Markets don't just move prices. They move emotions as well. And right now, emotion is red. If you're feeling uneasy, well, that's quite normal. 5 consecutive red months isn't something we see often. In fact, we haven't seen this pattern in this form since the deep bear phase of 2018. Back then, the narrative was rather similar. Bitcoin is dead. Again. It has died many times. Quite impressively for something that refuses to stay dead. Media doesn't predict. It amplifies. When prices rise, headlines scream optimism. When prices fall, headlines scream collapse. They don't create the cycle. They mirror it. But here's what they rarely ask. Is this weakness or is this reset? Let's zoom out for a moment. 2011, a 90% crash. 2014, a multi-year bear market. 2018, brutal capitulation. 2022, leverage implosion. Each time the narrative was final. Each time Bitcoin survived, not because of hope, because of structure. The protocol didn't change. The supply cap didn't change. Blocks kept ticking every 10 minutes. Price volatility does not equal structural failure. It equals market psychology. So what does 5 months of decline actually mean? It means sellers have been dominant. It means confidence is low. It means leverage players have likely been flushed out. And historically, extreme fear phases have often marked turning points, not because fear predicts bottoms, but because exhaustion does. Right now, you might be thinking, what if this time is different? That's always the question, isn't it? And sometimes, yes, things are different, but, not always in the way you expect. In previous cycles, the deepest pessimism arrived just before structural recovery. Why is that? Because markets overshoot. On the way up, optimism overshoots. On the way down, fear overshoots. So let's be rational. Who sells after 5 red months? Usually late entrants, over-leveraged traders, and, well, emotionally exhausted holders. So who buys in these phases? Long-term allocators, institutions with patience, people who don't need instant validation. Weak hands transfer assets to stronger hands. It's not poetic, it's structural. Instead of headlines, let's look at signals. Is the network still operational? Yes. Is hash rate collapsing structurally? No. Is long-term holder supply shrinking dramatically? Historically, in fear phases, it often stabilizes. Are exchanges seeing panic flows? That honestly matters more than emotional tweets. Bitcoin moves in cycles, not because of magic, but because of liquidity, macro conditions, and, well, human behavior. Every cycle has its euphoria, then distribution, then decline, then despair, and finally reaccumulation. Right now, we're somewhere between decline and despair, and despair rarely feels comfortable. If bottoms felt good, everyone would buy them. You'll notice something interesting. When price is rising, people ask, how high can it go? But when price is falling, people ask, is Bitcoin finished? Nobody ever asks, is Bitcoin unchanged? Which, honestly, is usually the more important question. So is this weakness? Short-term, yes. Long-term, that depends on structure. If the fundamentals remain intact, prolonged weakness often becomes fuel, because lower prices reallocate ownership, and new cycles require new positioning. Now, this is important. Fear phases do not guarantee immediate reversal. They never have. But they often offer asymmetry. When optimism dominates, upside shrinks. When fear dominates, risk may already be priced in. The opportunity isn't emotional, it's mathematical. If you're watching this hoping I'll say, the bottom is in, I won't, nobody knows. But I will say this, If your conviction disappears after 5 red months, it wasn't conviction. It was momentum, and momentum always fades. So ask yourself 3 questions. Has Bitcoin's supply cap changed? Has decentralization structurally collapsed? Has the global liquidity cycle permanently reversed? If the answer is no to the first 2, and well, uncertain to the third, then perhaps what you're witnessing is not failure, but transition. Back in 2018, many left permanently. Forums emptied, influencers disappeared, search interest collapsed. It really felt silent. Then, slowly and structurally, reaccumulation began. The loud phase returned later. Cycles don't announce themselves politely, they turn quietly. Right now, your advantage is not prediction, it's emotional control. Markets test patience before rewarding it. 5 red months are not a death sentence, they are a stress test. And stress tests reveal who actually understands the asset. Bitcoin has fallen for 5 consecutive months. That is a fact, but facts require context. And context, well, requires calm. The media may call it collapse. You can call it data. Because weakness and preparation often look identical in the moment. Only hindsight makes them obvious. If you want to navigate this phase with clarity instead of panic, stay here, because we don't chase headlines. We analyze structure, and sometimes the quietest phases precede the loudest moves.